Hey everyone, welcome back again to Dividend Stock Talk for another episode. Today being the 12th, we just finished one, not even a couple seconds ago. I shouldn't say a couple seconds ago because it's, as you can see down here in the bottom right hand corner, it is 10:09 a.m. January 12th. Now, weren't we just here at 9:20, at 9:29, just before the market opened a little while ago? Well, it just so happens that though we were here a little while ago, that we bought APA, which is Apache, and we bought some lows. And it just so happens we have been in and out of these trades before not even in a half hour. So as you can see, that we got in at 9:43 and got into lows. Now we're out of lows at 9:57 for our profit. Okay, now we bought lows at 166.91. Now we're out of lows at 167.51. Okay, same thing with Apache. We bought Apache at 1728, sorry, and then we're out at 1753, which is our profit that we were looking for. So we actually made 21.98 for the day, and now we're back into almost all cash again. So let's see if there's anything else we can buy today. Alrighty, so we'll go back to the market watch. Now, this is all the stocks that are paying dividends in the month of January. I don't want all of them. I just want the list of dividend kings or dividend aristocrats. Now, because the dividend kings have been paying for 50 years. Okay, so we can't do any of these because these are expiring this week and we don't want to be stuck there. Caterpillar will give us another week, because Caterpillar is going to be paying their dividend on the 17th, which is 7 days from today. Oops, wrong way. 17th January 2021. Yeah, see, Caterpillar's not even showing up, only because today's the 12th. So they usually pay on the 17th, which would be either Friday, which would probably be Monday. Okay, now the reason why I'm looking at last year's list is because it's complete. This list, we're in January. They're going to show us, the last couple of days, which was all this crap, which already happened, doesn't do me any good. So I want to jump back and look at who pays, and I want to jump into Caterpillar. So let's take a look at Caterpillar. It's paying $1.03. CAT. Caterpillar, there we go. Okay, so Caterpillar started out, take a look at the chart. Started out the year at 147. It took about 2 months for it to find its low of the year at 89.87 back in the second week of March. From the second week of March low of 89.87, she jumps up and continues to go and just made a recent high recently. The high was 197. So right now the stock's at 195.69. Now it could continue to go to 197. So let's give that one a shot. Oh, quickly take a look at the seasonality before we jump into, because Caterpillar is not a dividend king. It's only a dividend achiever, I believe. Don't get me wrong, it's a great company. Okay, so here we are here on the 12th. And it's basically going to be a sideways show. So what can we do on sideways for Caterpillar? Okay. Now, Caterpillar does have a weekly option, so we can look at that. Does it have the volume? Like hardly any volume at all. Look at this. And she's already jumping up to 195. Alright, so buy custom, my dividend trade. At $200. And we're at $1.05. My goodness. 1.05. Okay, so we're going to try 200 shares at the market, and then we're going to bump it up by the 105, which is the dividend, and let's see how that works. And she gets filled at 196.23. So we're looking at 196. We're looking at 197.23, which is going to be not a new high. It's going to be just under the new high. Okay, so hopefully she's going to test this high and see how she works. And we get $70 left, $70,000 left. Who else can we look at? We're getting Caterpillar. APA, we already done that. These guys didn't make me all that happy. Let's look at EOG. EOG, which should be expiring on Friday. That's nice. All right, so Eog Resources started out last year. Taking a looking at the chart again. Like anytime we look at something, we're automatically going to look at the chart first, tell you where it's going to be, or what it's done last year, and what we think it's going to do for the next coming week or so. Because that's all we want. We just want the next 4 days. Okay, so EOG started out the year at 85.46. It took about a month and a half for it to find its low in mid-March at 26.88. From there, she bounced up and only came back up to 62.39, but she's been going sideways lately. She's been staying between 34 and 60, and the last couple of days she's at 61.43 now, which is a nice little uptick. And EOG is paying a 28-cent dividend, so let's take a look at the seasonality first before we jump into that buying order. Okay, so seasonality is basically a sideways market for this company. So if you bought it January at 79, you're basically going to hold it until December, and it's still going to be 79. So it's not really going anywhere. Okay, so we're looking at the crossroad between then and now is a little bit of an uptick. Should give us the 28 cents. That makes me feel a little better, so we have a little bit of uptick right there. Okay, that makes me happy, and I think I will do that. EOG. Let's try EOG, and considering we got 70,000, so let's see what that's 1,000 shares. All right, so let's do 1,000 shares. I go to dividend trade. 1,000 shares. And we said 28 cents, so we're going to drop this down to 28. There you go. So we're going to have 1,000 shares, and then whatever we get at, we're going to add the 28 cents and put in a sell order. And off to the races. There you go. So she got in at 62,613,1,000 shares. All right, so there's EOG there. Now we got 61.64. Let's take a look at what we could sell covered call for. What are we looking at? Seasonality. We're going to go back to the standard chart. 61. All right, so let's find the exact amount we just paid for EOG. EOG would be right here, 62.13. So we paid it 62.13. So that would be the 62. So if we buy, all right, so now we bought it at 62.13 and she's at 61.58. So if we sell a 61.50 call, that's 10 of them. So if the stock doesn't go up, someone's still going to be paying us $900. That might not be a good idea because we have the sale price in and it's going to make us a whopping 20 some odd cents. This will give us a guaranteed 900. Hold on a second. Let's go back to the monitor. Okay, so you got 1,000 shares at EOG. And we got it as 62.13. All right. So what we're trying to hit is 62.13 plus 28, which would be 62. Where's my new target? 62.41. Oh. Okay, so we're looking at 62.41, and right now 62.47. So this baby should be kicking any second. All right, so much for that idea. All right, because we're looking at 62.41. All right, so let's do one more. Market watch. EOG FL. Let's take a look at FL. Okay, FL is Foot Locker. I'm going to tell you right now, Foot Locker is going to be a no before I even go on to the. But I'm going to go through the motions so you guys can see why it's a no. Okay, Foot Locker started out the year at 38.63, went sideways for about a month before dropping and finding its low of the year in mid-March at 17.41. From 17.41, she jumps up to a trading range somewhere in the 28 area for a couple of months and continues on up to another trading range of 39. That took for a couple of months. And lately, just at the beginning of the year, this thing did a big jump to its current high of the year, 46.93. Now it's at its current high. What does that mean to me? That means any time between now and higher is going to be a new high. And I don't like trying to make new highs. It's going to territory where it's never been before. It does not make me happy campers. That's why I'm going to pass on this one. But just for shits and giggles, let's see what seasonality this Foot Locker normally does this time of year. Yeah, kind of all over the place. Look at it. Okay, she's up, she's down, and she's going to be coming down in the next couple of days if it follows the same path it has done for the last 10 years. So, no thanks. We're going to pass on Foot Locker. Sorry, guys. So, who's next? Foot Locker. GD. Who is GD? General Dynamics, I think. General Dynamics. Okay, so General Dynamics automatically jumps up into the seasonality chart, which shows you a nice little spike between January and the middle of February. Okay, so where we are now, this baby's going to keep going up. Now, it's not a dividend king, so it didn't show up in our last chart. So let's see what she looks like for the regular chart, which we're going to open up right now. All right, the regular 1-year chart has General Dynamics at 181 a year ago. Took about a couple of weeks to find its high at 190 before dropping from 190 down to 100, which is basically almost a 50% drop within just a few weeks. Okay, so from the low of the year at 100 She comes up to a trading range of 132, stays there for a little bit, and then comes back up to another trading range of 148, which is right where she is, between 140 and 155, and she's been trading there since last May. So let's check out the last 30 some odd days, and she's in a nice little upward trend. Look at that trend. Oh my goodness. I want to jump into this one before the trend disappears. What is the 102? Okay, so let's do General Dynamics and look, see if we can snag 102. Now 102 is a hefty little bite for General Dynamics, and it's trading at 154. So we're going to buy it custom, 154, come down here to a dividend trade. Everything automatically fills in, and at 154 we can look at about 500 shares. Is that about right? Let's find out what 500 shares look like. And we want $1. Okay, so we're looking at $1.05 for the dividend. So I'm going to be buying it at the market. Perfect. We're going to buy it at the market, and then we're going to pump it up to 105. And she's off to the races. We got filled at 154.79. Okay, 500 shares, which is 5 contracts. Okay, so we got the second round for today, because the first round we bought and we sold before even an hour was up. So we made our money, we jump in, and we start trading in. Can that be right? Those numbers cannot be right. Look at that. 8,400 for the day. That's a nice little profit for the day. I don't think that can't be right. But profit and loss year to date is 17,389. Okay, so that is totally unrealistic. So we're going to wait till the end of the day to find out where it all settles at. Okay, because we have 1, 2, 3, 4, 5 trades still looking at. We're still looking at the buying the 50 contracts in APA 23, which I seriously don't think is going to go. Okay, so we might as well just delete that one and find something else to throw in there. Okay, so we just opened up Apache again, which is the APA. She opened up today at 1707, and she got a high of 1772. Now, we wanted to do the 1650 spread. I don't think that's going to happen. Not with Apache. Okay, let's go to Apache APA. Okay, the 1616 vertical 1650. Here we go. Yeah, it's at 51. It's way out of reach now. So 1617. All right, so we have to go in, eliminate this one because it's not going to happen. All right, and cancel that order. All right, so we canceled the APA order because there's no way that was going to happen. So let's do 50, the APA, at the 17. Yeah, it would be 16 and a half, 17, which is 38 cents per share. Oh, no. We have 1,500. This is only taking 400, so we can double it would be 8. Triple it would be 12, 30, 35 contracts. Now, the reason why we're doing 35 contracts, that will use up the money that we had set aside. 35 contracts, it's going to be 13. 38 contracts is going to be 1440. Let's go for 43 contracts. 1634, that's not going to do. 40 contracts it is. 41 contracts. All right, so 41 contracts is going to bring us up to 1558, which is going to be right there. And it's going to be the 16 and a half, 17, which is, she's at 1781. Okay, well, it's up there, leaves us with $61 left. Talk about really investing your money to get its peak return. This is day 2 of this week, which is the second week of January. And we've been maxed out on our trades. We're like all cashed in. And 90% of our trades, as you can see, is all actually stock positions. And we're only using 10% of our funds, which is $10,000 to do spread trades. Because spread trades are so profitable, yet they're not the dividend capturing strategy where you buy the stock and just add the dividend to it. And then, just collect the dividend. Which, what did we do? So we ended up buying the 16. Okay, so we just got filled for the Apache 16 and a half and 17 call. And we got it at 37 cents, which I forgot to see how much profit that was. So let's quickly do that again to give you an idea. Okay, so all right, so it's costing us $1,570. Now, what I'm doing is I'm making a duplicate order. I'm not actually going to proceed with the duplicate order, but if you create a duplicate order, it gives you the numbers that are already filled. So you can take those numbers that are already filled and you can see what your profit potential is going to be. Okay, so we got filled at where we are, and it's costing us $1,570 to make this trade. Now, as long as the stock stays above 17 between now and Friday's expiration, we're going to make our profit. Now, I'm going to let you know how much our profit's going to be. It's costing us $1,570 to get into the trade, and our max profit's going to be $533. So as you can see that right off the top of your head, that is over a 30% profit. So that's $533 that we could be making by the end of this week, as long as this stock stays above 1776. Now, why do we think it's going to stay above 1776? Well, for a few reasons. It's in an uptrend. Okay, we had one down day in the past week. Also, let's take a quick look at the seasonality and show you what Apache normally does this time of year. Now, here's where we are with Apache. Okay, as you can see, the seasonality chart, which basically shows you how it has performed over the last 10 years on a yearly basis. So it has a tendency to go sideways, which means if we get the crosshairs of where we are today, which is the blue line, okay, which is at 1792, and the red line, which represents 10 years worth of data, which is what, the 6508. Now, don't get thrown off by the numbers, okay? Because just because the numbers are at 1772 today, and what it's showing normally at 65, it's price adjusts. Okay, so if you take all the numbers and you convert them into an equivalence of movement directly related to today's price, it'll give you what it's moving at. So there's a nice little arithmetic problem, or what do they call those thingies? A multiplication problem, a mathematical problem that comes up with the probabilities of what it's going to do and where it's going to go and how it's going to react. So they put 1 year on top of another, top of another, top of another. So you have 10 years in a row to find out what it normally does. So this is what it normally does. It usually stays the same, it has a slight little uptick to it. But as you see, when we expand it for the whole year, Apache's going to go up for the first couple of weeks, and then she's a slow decline until somewhere in mid-March. Then she's going to go sideways, and then she's going to go back down a little bit more. It's like Apache's on a slow decline, but that's not what I'm concerned about. What I'm concerned about is how it's going to react in the next 4 or 5 days. Okay, next 4 or 5 days, the seasonality chart says she's going to go up, sideways. So that's what we're looking at, and we're looking at a 30% move as long as she stays above the 17. Okay, go back to the regular standard chart, and there she is, sitting pretty at 1772. Okay, so point blank, this is why this is my favorite trade. The stock as it is right now, 1772 or 1770, right at this moment. If the stock goes up, we're going to make our 30%. Okay? If the stock stays exactly where it is, that means it doesn't go up and doesn't go down, stays right where it is, we're going to make our 30%. Now, if the stock goes down, we're still going to make our 30% until we get to our break even. I'm going to show you how to find the break even. Okay, let's go back to the monitor chart. Okay, to find the break even for where we are now with APA or Apache, we're going to go all the way to the far right, as far as you go to the right, and then left click on those funny little characters there, and the drop down window is going to pop up. Now I'm going to open up a create a duplicate order, and that's going to give me the exact same order at the exact same prices that it is right now. Now, if I hit confirm and send, what it's going to do, it's going to pop up the numbers as if I'm going to create another trade. And when it does that, it fills in all these numbers. Now that will give me where my break-even point is at 1687. Do you see where 1687 is? Way down here. So we have this mark here where this thing can go. Okay? So if she goes up, I make the 30%. If she stays the same, I make 30%. She can even come down to 17, which is 72 cents. She can even drop 72 cents, and I'll still make my 30%. Okay? Anything below the 17 is going to start losing money, but 1687 is my break even. So I start losing money after below 1687. So that's what's my favorite trade, because it's one of those companies that increases their dividends consistently, not 50 years, but they've done at least 25. Okay, so it's either a dividend achiever or a dividend aristocrat. So it's increased its dividend for the last 25 years, and it's going to continue on doing so. That's why we're looking at this one. And I'm not going to send it because I have no money left. I have $179 left, so I can't actually trade this one. Even if you did, if I hit send, it's going to come up and say, oh, rejected, your buying power is not enough. So it's not a big deal. But it did give me the numbers I was looking for. All right, so now it's 10:37, January 12th. We just got our second round of trades because everything we bought first thing this morning sold. So we got in and we got out the exact same day, and now we're getting in again, and we haven't even gotten to the second half of the day. It's crazy, I tell you. All right, so that's going to end it for now, and we're going to catch you. I'm going to sign in real quickly later on to see how everything settles for the day, which would be after 4 o'clock. It shouldn't be a long recording, so I'm probably not even going to record it. But you know what? I think I will, so people have an idea of what's going on. All right, so I'm going to sign out for now. Stop recording.